Interested in real estate? How about wealth? Well, they go hand in hand. And here, you'll learn all about it. Welcome to Be the Bank, a podcast where we discuss and debate the topics centered around real estate investing. Your host, Justin Bogard, shares insights into investing in real estate to create real wealth and passive income for you and your family. He'll share stories of real estate investments done right, walk you through the process of owning a real estate note, and most importantly, educate you so you can be the bank. This is Be the Bank, brought to you by American Note Buyers. Now, here's your host, Justin Bogard.
Hey, welcome back to another episode, number 22, in fact, of season 5 on the Be the Bank podcast. I am Justin Bogard, and today I will have Richard Thornton on again, and we got some topics we're going to be going over as it pertains to the rising interest rate and where it's at today as we're recording, and how the war across the Middle East and Ukraine and what the Fed is doing, how this all kind of ties together. We're going to have a conversation about that and give you some updates on some recent REO sales / foreclosures that Richard and I are going through right now. So stay tuned. Richard Thornton.
Mr. Bogard.
I see you have your AirPods in today.
I do. I'm somehow, for some reason, my system is not liking my internal speakers. So I can use my normal mic, but I need to hear through my AirPods.
Yeah, I don't know if anybody listening to this podcast does their own podcasting, but it does make a big difference, at least for me. And since you're experiencing it today with actually, earbuds or headphones in, but I find it's easier to hear what's going on, because sometimes the ambient noise around, in your studio where you're at kind of can distract you sometimes. So do you notice a difference?
Yeah, usually I just guess at what you're saying. I have no idea. And I just sort of respond, and it seems to work. So,
well, my friend here is an idiot, so I'll just respond to how I feel necessary.
It seems to work. You haven't questioned it thus far. So,
I guess I didn't realize you weren't paying attention this whole time. The flow has been pretty well. With that happening.
So
all right,
yes, it does block out the ambient noise.
As we're recording this is what was I going to say? Yeah, it is Wednesday, October 25th, 2023. It's a very chilly day, windy day. It's not chilly. I'd say it's a cool day here in Indianapolis. I did get out to play some golf yesterday, which was nice. We actually hit, Richard, 78 degrees at the hottest point yesterday.
Oh my God.
It was really nice, and the sun actually came out for a little bit. So I think I got my last nice weather round of golf in for the year yesterday.
Well, we went from 90 degrees this weekend to 55 degrees right now, and cold and blistering, like you said. So we're getting a little bit of the same thing.
It got 90. Got to 90.
It got up to 96 on Saturday.
Wow, is that unusually warm for Petaluma?
Yes, we've had an unusually long Indian summer.
Gotcha.
We didn't have much of a summer, but we're having a hell of an Indian summer. So, go figure.
All right, my friend. We've got some more drama happening. The drama is unfolding with the interest rates with the Fed. And does the Fed, correct me if I'm wrong, does the Fed change the rate or have the meeting every month, or is it every quarter?
I think it's every quarter, but I could be wrong.
Okay. I feel like it happens often, so I was wanting to get confirmation. I forgot to look this up if it happened every month or if they have planned times when they meet and they get together. You would think it'd be like on a calendar schedule, but perhaps it's not. So current interest rate, national average interest rate, as I looked it up before we started recording this, Richard, was 8.04% for a 30-year conventional mortgage. And I believe that's been the highest in the last 23 years. I think since 2000, 1999. You still got,
so the
you still
Fed
got me
meets 8 times a year.
Oh, okay.
Yeah, Fed meets 8 times a year.
8 times. Okay,
I was busy. I was busy.
You
Busy.
are also
I was
our
busy.
producer in the background, looking
You're,
up information on the
yeah,
fly.
you're doing a podcast. I was busy. Come on. You know.
I was talking again.
Yeah.
You weren't
What
listening
you?
to what I was saying. You were
No.
just responding.
What you talking? What you talking? Did you ever watch the series Kim's Convenience?
No, but I have seen like advertisements for it.
Oh
Is it
my
funny?
God, it's just hilarious. I think it's on Netflix. Something like that. It's this Korean family in Canada, and so they speak sort of a little bit broken English, and the husband keeps saying to the wife, she talks to him, and she says, "What you talking? What you talking?" You know. Anyway,
That's
it's
funny.
quite yeah.
All right.
We
So
digress.
the interest rate keeps coming up. The Fed
Mhm.
keeps raising it. So give me your spin on how you see this affecting what's going on.
Well, I'm
Oh no, there
I'm
it goes
getting a
again.
phone
You're
call.
batting 1,000 this
I'm bound.
season.
Yeah,
The
this is not
phone.
working.
So
It's not.
I apologize to the listening audience.
That's right. The half of the duo is working here, and the other half is just falling apart. I mean, he's got a head cold. His speakers won't work. His phone's coming in. He can't concentrate. I mean, come on, get your act together, dude. So,
All right.
all right. Oh, it's right. I got to turn my phone off. All right. So, that was Drew. So the term I would use is wonkiness. I mean, I think,
Wonkiness. I like that.
yeah, I think, and that's a technical term. I think that the all of the prognosticators are kind of broken if you look at what's going on out there.
Okay.
The Fed keeps increasing interest rates, hoping to slow down the economy. Well, the economy's not roaring, but it's roaring away, but it's not really responding to what they're doing. So they want to keep raising rates. The market rate, the job market is just thumbing its nose at the Fed and saying, we're going to remain strong, nanny, 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 and we're going to keep rolling ahead here. So we don't care what you do. And this is all in spite of the fact that we have a new outbreak in the Middle East. The Wall Street seems to be looking at that and going, yes, this is serious, and yes, I'm sorry. I don't want to, diminish this because people are dying and things like that. But in terms of an actual capitalistic point of view, it's a non-event. There's always tumultuousness in that market.
Yeah.
We've already priced that in, and yes, there is Ukraine. Things going on in Ukraine, that is increasing the oil prices because the OPEC and other groups are playing fun with that and saying, "Hey, look, we can make more money, and if we restrict production." So that's what they're doing because Russia isn't producing as much oil. But all in all, the markets just aren't doing what they're supposed to be doing. Traditionally, what they would do, if you pull one lever,
yeah.
If you pull to the right, it goes to the right. You pull to the left, it goes to the left. Well, this is pulling to the left and it goes to the right. So, I get a lot of my investors say, well, can I get higher rates on my private mortgage notes? Because, yields are going up or market uncertainty. And I go, no, it doesn't quite work that way. We're in a different area. So it's just more of a commentary, you have to sit back in sort of a Zen sense and look at it and go,
Yeah.
all right, this is just crazy.
I like what you said about describing it as wonkiness, because after you started giving your spin on it, it makes sense, right? It's just odd. Like when you expect one thing to happen with historical data and historical events that has happened, like what the Fed does, I'm going to do this because I know it's going to pull back in a different direction. It's like it didn't move. It didn't do anything, right?
Right.
They raised the rates and it didn't do anything. It kind of made it worse, to a certain sense. And yeah, so I agree with you. It's just really odd. And I don't think anyone has the right answer, the solution. I think they're just going to have to try things and maybe lower it back down and see what happens. Maybe raise it up a little bit more. We don't really know what's going to happen. Everybody keeps saying, and everybody really believes the path is going to be to start lowering it eventually. And it feels like we were talking about in at the end of 24, we were going to see a significant change, but it's probably going to be more like the end of 25 when we start seeing it closer to maybe 5.5%. And maybe that's the flat line of where we're going to stay for quite some time and be the new normal.
Yeah, I'd say I'd agree with that. I mean, the tsunami of defaults has not happened, as we
Yeah.
have said, because of governmental programs and because equity is up. I may have mentioned on this program that, and so here's another wonkiness, right? Rates are up. People should not refinance. I've got more refinancing going on in my portfolio right now than I've ever had. I now have 4 properties that are being sold or refinanced. I don't like that.
Now,
It doesn't make sense.
Now, let me jump in here real quick about that, because that's interesting. So do you think do you notice in your portfolio of those loans that are happening that it's because they have a lot of equity and they're trying to tap into it?
Well, I think it's 2 things. These have been steady payers.
Okay.
So I think these people have finally gotten on their feet and been able to prove to either some interim or some regular lender, some local bank or something like that, that they are creditworthy. They can say, look, I've got a payment history here of 3 years. So that's number one.
Okay.
Number two is you've got huge amounts of equity. Like the one I mentioned to you this morning, I've got a $47,000 mortgage on it, and the property is now worth $160,000. Well, you can lend to somebody who's only got a 650 or 675 credit rating because they've been creeping up from where they were if you're only at 30% loan to value.
Right. Yeah. The risk is significantly lower once the property values go up. I totally agree with that.
I mean, even if you've got a huge deflation in the market, come on.
It's interesting you say that. I'll do a quick little sidebar because it's an interesting little case study that kind of happened today. And so there is someone in our kind of American note buyers sphere of influence type of network that reached out to me and was asking me questions about a foreclosure, and they had lent money on a rental they had in Florida. I'm not sure where it's at in Florida, but the person was able to bring significant cash to the table to basically pay off his underlying mortgage. I think it was like 100 or 150K type of mortgage. So that property, I think, was, over 200 at the time. So they brought a bunch of cash. They paid down his mortgage, so he owned it free clear, and then he still carried back like I don't know. I think it was like 90K.
Mm-hmm.
And so the person was supposed to be paying, their payments monthly, and then a balloon payment was going to happen after a few years to owe the rest. So what happened was after about 3 or 4 months of payments, the person stopped making the payments because what I remember from this conversation from earlier was that they just couldn't afford it at the moment.
Mm-hmm.
And so they got about 4 or 5 months behind. And so he was trying to ask me questions, what do I do in this situation, or where do I go from here? And when I started asking him questions and getting this story involved, I was thinking, oh my gosh, like this person, the borrower, put down significant cash, and they owe, to your point, when you're talking about lots of equity in there, like if the house is worth maybe 300K today as is, and they only owe, let's say, 80 plus the juice on it. So let's call it 85 to 90 on it. I mean, that's like less than a third of the property value,
Right.
So
right.
why couldn't they just go to the bank? And that was my first question. I was like, why can't they just go to the bank and get a loan to pay you off? And it seems so simple. Because I was thinking, the guy that was concerned, the lender, I was just trying to tell him, like, you're in a great position here because there is so much equity here that you're hoping it goes to foreclosure because you're going to get definitely full value for what the judgment is, at that time. But, it would be nice if the borrower is able to, keep the property and, go get some sort of loan.
Yes. I mean, and so what beyond that are you drawing from that?
That I think the inexperience of the person I was trying to help, they were overly concerned about the situation because of you put it, the big D, right? It seems
Right.
ominous. It seems bad. It seems negative. But when I was trying to spin this for them and I said, look, you don't owe anything on this property. So why does it matter if it takes, 6 months or a year and a half to go through foreclosure? Like, you're not losing any money, right? You're going to get that money because basically you have, an Apple iPhone worth $1,000 and you got, $250 into it. Like, you're going to be able to resell this thing, and get plenty of money back and plus profit. So I think after they heard that and they were reassured about, hey, look, because what's going to happen in Florida is, honestly, if they have to foreclose, it may take a year or two to foreclose if, there's pushback from the borrower, just because things can be slower in Florida. But it doesn't really matter because property values are coming up so much and they're going to continue to rise even more, that the property may be worth, Richard, $330,000 by the time it's done, through foreclosure. So it's just really interesting how you come across these deals and they end up going a little bit sideways because things aren't going well in the economy. And a lot of people are just struggling because everything is more expensive. But us as lenders, if we're buying these things right and we're getting good loan to values when we originate them or when we buy them from somebody, I mean, you're still sitting really, really, really well. And appreciation is helping that even more, put, more protection, some more safety net for us lenders.
True. And you might get an iPhone, right?
You might get an iPhone, yeah. It was just happened to be right in front of me, so I was trying to think of what's something that I can compare it to. Even though we know the iPhone doesn't appreciate in value, but
that's true. But yeah, and I think a lot of people, especially when they're novices, they don't take that.
They don't know what they don't know, and that was smart of this person to try to contact somebody like me. I'm glad that they contacted me because they actually are from, close to where I live here in Indiana. So I was a local person to them, but yeah, they got reassurance of like, hey, look, man, you're sitting really well. It's not like they owe you $90,000 and the property is worth 95. Like, then you kind of have a problem.
And I'm glad they contacted you, Justin, because you're so smart.
Yes. Yes, I am.
We kibitz with each other, folks. So, we have fun.
Well, they're thinking I'm so smart, but I'm thinking like, man, there's like 12 other people I probably would have called. He got a short end of the stick today.
Yeah. Short end, which is a good segue into the other thing we were going to talk about, right?
Yeah, this is your foreclosure that you got going on.
Yeah. So, I mean, I'm not getting the short end of the stick. I'm getting what I'm owed. But the reason that we thought this was worth bringing up just a little bit is that I've got another note that's being paid off. It's because I mentioned earlier. And it's a $160,000 house. It's a $47,000 note. And I keep getting called. I've gotten four calls today and yesterday from the title company.
Okay.
Because they can't believe I'm selling this house for $47,000 and it's got $160,000 value. And they are concerned about fraud. They have had DocuSign fraud twice and gotten stung twice on the title and had to come up with insurance funds. So they've called me on my business line. They've called me on my mobile line. They've asked all sorts of questions about my articles of incorporation and why was one signed in 2017 and another document was signed in 2020? These are documents regarding the formation of my company.
Yeah.
Blah, blah, blah. I don't think I've ever been grilled for over an hour on just.
That's like the two businesses I would never get in real estate would probably be a title company and a loan servicing company, because that just seems like a lot of chances for failure.
Yeah, we have a loan servicing company that I'm not sure it's going to make it. I know we don't need to talk about names, but
well, there's actually a lot of loan servicing companies out there. Some of them are state specific, like they may work in just one state or a couple, and some of them work, almost every state. Right. But yeah, it's it's a tough business.
I think it's a very tough business for very low margins.
And you got to deal with people like Richard Thornton.
That's right. That's right. Who keeps things straight.
If you guys want to check out the video feed that we do on this podcast, please go to our American Note Buyers YouTube channel. You can check out what's it called? The playlist called Be the Bank. And you can see all of our recordings of the podcast we do for the last 5 seasons.
All right. So I've got a really quick, another just anecdotal thing. That's a quick,
Okay.
Another property I'm selling. I'm buying this one actually. This is going from self-directed IRA to self-directed IRA. Okay. Being sold by a self-directed IRA, and I'm buying it my self-directed IRA.
Okay.
Well, we've got the allonge and, all the other, the assignment and blah, 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 all done. I've shown all that to my company. My company is saying, we want the signed docs before we'll fund. And the seller's IRA company is saying, no, we want you to fund before we send you the signed docs.
So you got 2 people pointing in different directions.
Yeah. And I don't have a resolution yet. I'm still working on this one, folks. To be continued next podcast.
It's almost like you have to have an escrow company in between so that the signed documents can go to the escrow company and the funds can go to the escrow company, and they hold it until they just, they show both parties like, look, it's all legit here.
I know.
But I get it. And you bring up a good point about the title, potential title fraud, and how diligent they have to be with, verifying who you are, because that stuff can get messed up pretty easily nowadays, because it's so easy to manipulate things electronically, because everybody's trying to go to, online stuff only. Like I'm trying to do online closings only, virtual closings, because it's just a lot more efficient, and
yeah. And I don't know about you, but I think there's somehow that the bad guys figure out that we're using DocuSign or whatever. I'm not that technically oriented, but I get a lot of DocuSign requests and closing requests that are total phishing scams that look very much like DocuSign. So you have to be you do have to be very careful.
Yeah, if I don't recognize the name, I just delete the email. That's been my habit for a very long time, because I see a lot of those, invoice, blah, blah, blah. I'm just like, invoice? Like, I don't even recognize the name. So I just delete it. And if they want their money, they'll call me.
Yeah.
I made a mistake and be like, hey, okay, I deleted it. And they understand. But I haven't had an issue with that as far as after I delete some of that stuff, somebody calling me. Because typically you're already dealing with somebody, and they you recognize the invoice or the company that you're working with. So, but you do have to be careful.
Now, if you start to date somebody named Sally Invoice, you're in real trouble, because you're gonna be deleting all their emails.
Delete.
That's right.
That's right. All right, Richard. There was what else happened? So I've got a eviction. I had a note in Michigan, and I foreclosed on this loan because I had basically no response from the borrower. The borrower was still living in the property after I foreclosed on it, so I was required then to go through an eviction process. And then so I submit to the courts the documentation, or my attorney does, and then they have a court hearing, and then the person dwelling there did not show up. So then the judge delayed it by another week to have another hearing. The person didn't show up again. And then they ordered the writ. And then the sheriff got the order from the judge to say, yes, you can go get them out of there. And in this particular county in Michigan, they actually go in and can remove all the stuff and throw it away. Because by this time the person has been warned to get their personal belongings. And so they had several dumpsters full of junk in a house, in the basement, in the detached garage, and they actually cleaned it all out for me. However, they did not change the locks.
Oh no.
They said, well, it's open. And I said, well, I guess I'll be getting somebody up there to change the locks ASAP. So that was kind of funny, but I've got the eviction part done. But I think this process it's been over a year since I had to start foreclosure. I think I started I want to say July of 22 is when I started the process. And then it's taken circle all the way back to now, almost a year and a half, with going through the foreclosure, all the proper things, and then going through the eviction. The eviction actually took a couple of months. Some of the delays actually were on the attorney side for not getting the stuff to the courts, for a couple of weeks.
It's interesting though that they did the complete clean out, because my experience is I've had to do the clean out myself. So How much did they charge for that? and all that?
I haven't gotten the bill yet, but I suspect it's going to be between $4,000 to $5,000.
Ouch. For just the clean out.
Yeah. And it's to my understanding, it wasn't a negotiation. It's like, this is what happens. This is what happens when you go through eviction. I was like, okay, well, it is what it is. Well, they did leave a hot tub because they said the hot tub was too heavy to move. So this could add value. So anyways, I'm able to put the property on the market today, and I think I'll be able to sell it for twice as much as I have into it. So I'm still okay.
So you have to wonder. I mean, I think that we all sort of get quizzical sometimes about a lot of the property owners, but you have to wonder what was going on with that person. I mean, they had an asset that was a perfectly good asset. They somehow let it go in the toilet, but still was worth so much more. And basically, they're walking away from how much money?
I think they probably could have made maybe $10,000 after paying off the full judgment. They probably could have had some money in their pocket.
Yeah.
So I do know a situation about this, and we can talk about this because it was the original borrower actually stopped living there because their parents passed away when they were paying us the mortgage.
Mhm.
And so then he moved into his parents' house, which was nearby to where this house is, where we have the mortgage on.
Are you saying that somebody stopped making their mortgage payments after they died?
No. So the borrower has parents that have a separate estate in a separate house. So they passed away. So he moved into their house. So he put his son into the house that we have the mortgage on. So his son was supposed to be paying him the mortgage payment so then he could pay the mortgage payment. And so then that stopped happening. And the son just pretty much squatted there for rent-free, mortgage-free for over a year.
Wow.
And the original borrower, it was actually his childhood home. So he was telling me on the phone, this was an emotional thing for him to keep the house, but he was not able to make the payments, and he was unreachable as well. But yeah, there again, they walk away from money that they could have had for whatever reason.
Yeah, money and memories, and
exactly.
It's just there's a lot of disconnects in this business.
Yeah, it's amazing to me how many reach outs there were to the borrower and the person dwelling there about, hey, you need to pay this. You're going to lose your house. We have to evict you now. You need your belongings? Like, I mean, obviously I've been telling you, it's been going on for over a year. It's like, I mean, times are tough. I get it. But at the same time, I think I'd want some of my belongings, or at least try to figure out how to salvage my, childhood home to save it. So,
yeah. So
anyways, so that was one of the more recent things that's just kind of, it stinks not getting the cash flow. But at the same time, we do always want to try to figure out, like, what if the borrower wants to stay there, like, let's figure out a solution. But when they're just when they just don't communicate and they don't respond after numerous times of reaching out through email, through phone, multiple phone numbers, and sending out people to the house or sending letters in the mail, like, it's just like, what do you do beyond that?
yeah.
So.
And if you've got an investor on the deal and you're having to keep them whole, then you're sort of getting a double burn. But.
Yeah, and we would kind of move their protection to a different asset. This one didn't have an investor on it. This was just our money.
Mm-hmm.
So, there you have it.
Okay. Well, this has been a broadcast of sort of everyday experiences and things that that are going on in our lives.
The bad is not so bad. At the old cliche, at the end of the day, we're still making money, and we're still actually making more money than we would if these people were paying for the past over a year. So I'm actually going to be making more money. It's just I had a dead time of no cash flow for over a year.
Yeah, and can you survive that period? And in my case, these payoffs, I can complain about them. One reason I would complain about them is just losing the cash flow, but the bigger reason is most of them are partials. So I actually don't have anything in them. Matter of fact, I've got minus basis because I made money on selling the partial.
Yes.
But there was 10 or 15 years of income that was going to hit in a year or two here that I'm not going to get. So bummer.
All right. There you have it. Richard can lend out money now.
That's right. That's
All
right.
This is episode number 22 on the Be the Bank podcast, season number 5. I'm Justin Bogart here with Richard Thornton, and we will see you guys on the next episode. Take care.
Stay tuned.
Yeah.
Thanks for listening to Be the Bank. We hope you learned something from today's show. If you enjoyed this episode, please rate and review us. Plus, check out our channel on YouTube and follow us on Facebook and Twitter at Be the Bank and on Instagram at Be the Bank Podcast. Be the Bank is sponsored by American Note Buyers. Thanks again for listening.